What is going on, guys? Good evening. It's your favorite mortgage lender, Abdel Kouami, Got Mortgages. Hope everybody had a blessed weekend. The weather is finally starting to clear up out here on the East Coast, which is awesome. I'm going to dive right into it. It is such a huge, important week. We just got over the inflation data week for the Fed's preferred measure of inflation for the PCE report, personal consumption expenditure. We have a huge week this week when we talk about the employment week. We know that we have a little bit of the pending death deficit that we're looking to see when it comes to the ending. So much to talk about. So I'm going to dive right into it. Obviously, how did the PCE report came in? Actually came in right just shy of expectations. Headline jumped up to 2.3%, core at 2.7%. If we look at the last 3 months, we've been at a 1.6% under that Fed target of 2%. We do know, again, that annual rate is at 2.3. Again, most of these figures are kind of in line, right? We want to keep an eye on these forecasts. Most importantly, the focus is always going to come down to core. And as we see here with core, we're at that 2.7 mark, strips away, obviously, volatile stuff like food and energy, right? Bottom line, again, we're making progress towards the Fed's goal of 2%, right, for core PCE, but we're obviously not there yet, right? We saw a little bit of a bump on existing home sales, right? A little bit of a bump, again, when we talk about the slowest pace since 2009. Interest rates, of course, once again, being a little bit of that culprit. Inventory is slowly starting to jump up, right? Still way below pre-pandemic, pre-COVID levels. You kind of see here, right? We're seeing a little bit of an uptick of 0.8% month over month. Median home price up 423,000. Month supply still low, right? Only at a 4.6 month supply. 28% sold above listing. 30% first-time home buyers. Houses again selling faster. 27 days on the market from 29 days on a national level. Again, some different things. Again, persistently high interest rates obviously are one of the main culprits behind some of these slower activities of what we tend to expect. New home sales did dip, right? 623,000 from April to May, which typically expected. And then on the other side, when we talk about new home sales for inventory, just jumped up. Remember, a majority of this 9.8 month supply is just homes that are not even done yet, right? 117,000 homes haven't even started. 271,000 under construction, 119,000 had just been completed, really pretty much. So if you look at that, majority of it, pretty much of 271 and 117 aren't even ready to move in yet. Annual home price, again, growth decelerates. We're talking about Case-Shiller, right? A little bit of a slowdown. We're still up 2.7% on a national level. And when we look at the main 20 cities that are out there, up 3.4%, again, kind of seeing a little bit of the upward transition when we talk about economic data, right? U.S. economy did decline on a GDP level, right? 0.5% in the first quarter. Larger contraction, of course, from previous numbers. Decline was primarily driven, once again, to the scare of tariffs and reduced government spending. Jobless claims did tend to tick up a little bit, showing a little bit of a rising trend, particularly for those who are rising, obviously, in benefits. Big point we're going to look at is, again, as I mentioned earlier, is going to be when we talk about the employment data, right? Job opening and labor turnovers on Tuesday. Wednesday, we'll get private payroll on the ADP report. Thursday, the weekly jobless claims, and then the infamous, obviously, non-farm payroll we'll see also on Thursday, with Friday coming in as 4th of July. So short week. So we'll kind of see, obviously, how the market is going to be reacting to some of these data. And then we'll take it from there. One thing I did want to point out for us also is some of the expectations on the jobs data. We know that ADP and BLS again is coming out. Market's expecting 85,000, 110,000 to be created. Remember, the last 2 months, ADP recorded only 97 jobs created combined. Meanwhile, we always know BLS report, also I refer the BS report, is always overstating and then coming back later, revising their numbers, right? Unemployment rate last week was 4.2%. Of course, it ticked up, that morning to 4.3. Of course, we want to be moving the opposite direction. So jobless claims and continuing jobless claims, especially on the continuing jobless claim side, continues to still be super, super high, right? Where if you're let go, you're having a hard time finding another job. So we'll start seeing that. We'll get a little bit of updates on that. But the one good thing is, if we take a look at interest rates, guys, we have been on a consistent, pretty much downward trend really over the course of the last month or so, right? If you could see here, taking a pretty deep dive from the first of the month, you can kind of see really since the last month or so, or I should say even 2 weeks, interest rates have dipped from almost as high as a month ago, being 7.1. We're at roughly about 6.6. I've had quite a few clients actually lock in a little on the other numbers as well. So a couple different things for us to keep an eye out for, of course. Obviously, as we continue seeing some of these changes, I'll keep all of you guys updated and we'll take it from there. Talk to you guys soon.